Okay, we've had 1 year to sit with these past picks. July 9th is when they were made. Let's check in on them. Electronic Arts is the first one. Not bad. It's up 9% since you recommended it. As we take a look at the chart, do you still like this one?
We like the whole group. And subsequent to that, we spent some time talking about Take-Two Interactive and a couple of other names. The whole group is behaving well. Consumers spend money on this. There is a secular trend there. And you can see, based on what's happened with Pokemon over the last couple of weeks, how quickly revenue can ramp up with a successful game. And it makes it very attractive.
Does it require a lot of investment?
It requires investment, and it's intellectual capital, and you could be out of favor. But it's like a record or a movie. There's a long tail on the revenue stream that goes along with a hit title. And so this is something that's very attractive, and obviously the margins are very, very good.
Goldman Sachs reporting today a big beat on the bottom line. The market doesn't really seem to care about that. This one's had a tough go, as has most of the banking sector. It's now down 21%.
Yeah.
Do you want to own the financials here?
So Amber, we're active managers, and we're tactical. We pick our spots. And so while we've had a bullish view, there's twice in the last year we've had to play some defense. Once was last summer, shortly after that interview, and once was in January, February this year. We were early on the U.S. financials. It still is a relatively small weight for us. Clearly, it didn't work right off the bat. And I think that the capital markets companies like Goldman Sachs still have something to prove, because there weren't many IPOs being done over the last year. Trading revenues were lower, acting more like a utility. I would prefer at this point to focus on the commercial banks and also some of the asset managers, because as markets get better, these things should perform well.
Okay.
But this one we got stopped out of.
And lastly here, another Dow component reporting, United Health Group. This one has done pretty well. It's one of the top performers, up 20% since you purchased it. Take us into your thinking of why you recommended it in the first place and whether you still continue to hold.
So we own a number of themes in the U.S. that are not driven by the economy. So we're big believers in defense, because it's really not economics. We're big believers in healthcare. And in healthcare, spending on healthcare is rising. It's undisputed. There's a big new payer in town over the last couple of years. So there is capital available, the U.S. government. And so whether you're looking at managed healthcare like United Health, which is a very big holding for us, or whether you're looking at pharma like Bristol Myers, another big holding, or whether you're looking at devices like Medtronic, another big holding, all of these companies are performing remarkably well and are not dependent on an acceleration in the economy, just very domestically focused in the U.S.
Expensive?
I think that they can get a lot more expensive. Realistically, that's quite a predictable industry, and there's good trajectory, and there's good long-term secular tailwind to the industry.
Okay, that is a look back at some of the past picks. We're going to start taking your questions again on the other side of this break. Give us a call. We're talking North American large caps, 1-855-326-6266, and we'll speak to you on the other side of the break.